In this example, we will be looking at cash dividends with dividends in arrears. Dividends in arrears occurs when we have cumulative preferred stock outstanding. Cumulative preferred stock means that our preferred stockholders are entitled to a certain amount that is based on the number of shares outstanding, the par value, and the interest payment. And if they do not receive those in a certain year, then they have to be paid in following years, assuming that the amount declared by the board of directors allows that to be done. So we have a series of 4 years here, and we've paid out dividends. So we're going to calculate how much of that dividend each year is going to be given to our preferred stockholders and how much will be given to our common stockholders. Well, in 2011, you can see we have 0 on each of these lines because we did not, or the board of directors paid out 0 for 2011. Now for 2012, the board of directors paid out $120,000. So how much of that goes to our preferred and how much of that goes to our common stockholders? So to calculate the amount that belongs to our preferred stockholders, we take the 10,000 shares outstanding times the $100 par value, which is 1 million. And then we take that times the 0.7, the 7%, and that gives us $70,000. So $70,000 of the 120 has to be paid out to our preferred stockholders. And the thing is that $70,000 is going to be for 2011. Those are our dividends in arrears. Since the board of directors did not pay any 2011, we're going to pay the 2011 portion in 2012. So then we have to figure out how much of 2012 do they get. Well, that $70,000 represents how much they should get for each year. But if we were to pay them another $70,000 right now, we would go over the $120,000 that the board of directors declared. So we can't pay out more than what was declared. So we take the $120,000 amount that was declared minus the $70,000 we have already paid out, and that leaves us $50,000 that we can pay out for 2012. So total, our preferred stockholders are going to get all of the dividends that were declared in 2012, but it represents the 2011 dividends in arrears and then the current portion for 2012. Keep in mind for 2012 they should have got $70,000, so we're still going to have to pay that $20,000 difference. Then we're going to calculate our per share amount. So that $120,000 is the total amount paid out. So if you have 1 share of stock, how much would you get? Well, so we take the $120,000 total payout divided by the 10,000 shares that are outstanding, which leaves us $12 per share. And then there's nothing left over, and our common stockholders only get what's left over, so they will get 0. And then we've paid out the full $120,000 that was declared. So for 2013, first we have to ask, do I have any dividends in arrears? And I do, because I was not able to pay the full $70,000 owed for 2012. So the first thing I'm going to have is I'm going to have my 2012 dividends in arrears, which was the difference of the $70,000 that was owed minus the $50,000 that was paid, which leaves me $20,000 that will be paid to our preferred stockholders. That represents 2012. And then we want to take a look at our 2013 dividends, keeping in mind that the board of directors only declared a total payout of $140,000. So I calculate how much they're supposed to get, which is the $70,000, which was the 1 million, times our rate of 0.07, which gives us the $70,000. And in addition to this, we can't give them more than what they're entitled to. So they're going to get the $20,000 from 2012, and they're going to get the $70,000 from 2013, which is only a total of $90,000. And if you remember, the total payout was $140,000, but I can't give them any more than that. I can only give them what they're entitled to. So what that means is our common stockholders are going to get what's left over. We declared a total of $140,000 to be paid out. $90,000 went to our preferred stockholders, so that leaves us $50,000 that will be paid out to our preferred stockholders. So we then calculate our dividends per share amount. Again, we're taking $90,000 and sharing it over 10,000 shares outstanding. Dividends are only paid on outstanding shares, so that's $9. But then our common stockholders have 50,000 shares outstanding. So where we're paying out $50,000, we're having to spread that over 50,000 shares. So $50,000 divided by 50,000 shares means you will get $1 per share. And so then the 90,000 plus the 50,000 give us our total $140,000 paid out for 2013. So then we're ready to pay 2014. So we asked, do I have any dividends in arrears that I owe to my preferred stockholders? And I do not. The 2012 were taken care of, and then we were able to pay the full $70,000 owed for 2013. So in 2014, I only have to worry about 2014 dividends. So for 2014, just like we've calculated before, we have our $100 par value times our 10,000 shares outstanding, which is 1 million, times our 7%, means that I need to pay them $70,000 in dividends. And I don't have any arrears, so I can't pay them more than $70,000. So we declared $140,000 in 2014 minus the $70,000 paid out to my preferred stockholders, which means that the other $70,000 will go to our common stockholders. So that $70,000 is just a coincidence because it's $140,000 declared minus the $70,000 paid out to our preferred stockholders. So that leaves us with our totals. $70,000 paid out. $70,000 divided by the 10,000 shares outstanding is $7 per share. So if you own one share, you'll get $7 paid out in dividends. And then for our common stockholders, remember they have 50,000 shares, so 70,000 divided by 50,000 shares is $1.40. So if you own one share of common stock, you'll get $1.40. And then that added together gives us our total shares that was declared and allocated of $140,000.